back.
Good morning, sir. Thursday.
Yeah.
Downslope.
All day.
And for me, this is a good down because Fridays, I love month-end trading. I know I talked to Ty, it's got nothing to do with anything. Month-end in the FX space is usually, it's like everything. It's like he looks at options expirations as big days. And we certainly had a big one on Friday. They're not always panaceas of movement, but I'd say 8 to 9 times out of 12,
there's
those monthly expirations, stuff to do.
Yeah.
So I'm excited to see where we go rolling into that. And it's too early to talk about setups for month-end plays, but
do you think there's any correlation between how volatile the month was and the volatility around the month-end flows? Because, like, I think I could anecdotally build a story around, like, February, and it was only 4 weeks. It was a very short month in terms of trading. What, 20 trading days? But it was probably one of the most volatile months that we've seen, not only for Forex, but for pretty much every asset class in the last several months. Does something like that catch large institutions and month-end flows a little bit off guard now that it's like, man, there's been so much tariff stuff, there's been so much crypto stuff, equity stories, is Nvidia gonna, pick up this NASDAQ that's not crashing, but it's not picking up really off of its lows for the last 2 weeks of trading. And now it is, to your point, we have essentially 36 hours left.
Right, and these flows are driven by a lot of different participants. And a lot of times, sir, if the market, again, they're rebalancing. So I ran a fund for a number of years. You have to be very specific in your methodology. And if you don't follow your methodology, whether that be I buy on Wednesdays when the sun is up, or I rebalance at the end of the month. If you don't do that, you're violating your fiduciary agreement with your customers, and then they can sue you for better or worse. So they're compelled to use these times to rebalance their portfolio. Now, because of the movement, now we've seen a lot of strength in the dollar, then some weakness come through. So what do they have to do? Are they light on their dollar euro, or are they short? I don't know.
That we have no clue.
No, and this is where it gets to be a little bit of a dance. The markets are a little bit thinner, so if the flows are substantial, they'll have a little bit more elasticity to them. And you'll see, starting at like 8:30 our time, you'll get a little spurt, and then it's faded. And you can see market makers and other players are kind of feeling out, okay, what's in the book to be done. And the guys who have to execute these orders are not idiots. They're chief dealers at the banks. So they know, they're going to set the table as best they can to get their business done, but they're compelled to do it around certain time frames. So that 10 o'clock window in our time, 10:30 window, 11 o'clock window.
This is all central. This is pretty much,
time.
And I don't think any
it's
coincidence.
this game of chicken where they don't want to turn their cards over. They actually want to even get the market thinking possibly the other way and catch those guys off guard. Because I did this, and it's all a game of cat and mouse. And sometimes you're right, and other times it's like, shit, I'm behind. Now I just got to go bang them out. And then you'll see, dollar yen really start to move. It's like, God, they're eating through offers like they're going out of. Yeah, he's got to get something done, and it's got to get done by 10:30. So it's just things to watch. Whether you're trying, the harder part is trying to guess what's the flow going to be. Is it going to be buying yen for those 2 hours? That's a tough guess. Looking at where the market maybe gets to a point that's fadeable is interesting.
Yeah, and
so you look at a market like this, and now JP Morgan came out. There's dollar buying that needs to be taken. And JP Morgan does an analysis, and they've already said in Euro, in Kiwi, and Aussie, there's dollar buying that needs to be, AKA there's currency selling that needs to take place for month-end purposes, for rebalancing purposes for funds. You listen to that, I've never gone back and seen how many times I've been right or wrong. It's just an interesting takeaway, and you'll watch to see how the market shapes up. Now, unfortunately, you would think these guys, well, let me just do it 2 days ahead of time and I'm done. And nobody knows it's coming.
Mm-hmm.
That violates, again, the terms of the way you raise the funds. So you can't do that. You're obliged to do that around the London close, the London fix, they called it, which is at 10:30. So it is just a little bit of a game of back and forth. If we see selling come in here, and it really, and I should know this, but they did have an opinion on dollar yen. I'm not sure what it was. You'll start to see that play through a little bit. Now, sometimes, like last month, we went through it, and there was barely anything that went through between 10:30 and 11. Sometimes there's no rebalancing to be done. For me, trying to guess it ahead of time, like jumping out, oh, well, Morgan says there should be sellers, so I'm going to get short, that's a tough game. I look to it more for, are we getting extensions out of ranges that are driven by price-insensitive players? What I mean is, guy doesn't care what the price is. He's just got to get a certain amount done. And does that provide an extreme that gives me an opportunity to counter-trend a little bit?
Yeah. And
so hopefully not too tangential an explanation, but kind of looking at where and what you'll see is, even if we look at this chart, all of a sudden we get a sell-off down to the low 148s, right at 11.15. For me, I'm buying that. And I'm buying a little bit more. So is every other chucklehead like me. And if that doesn't start to pay, in other words, that market doesn't get that bid back, we're all in the same boat. That trade will get stale, and when it rolls over through 148, there'll be more to do, and you'll have to get out. So there is no risk-free trading. This is not risk-free trading. It's just looking at another angle. You talk to Tom, he's like, you're a complete idiot. None of this makes any sense.
Sure, and it'll be especially interesting because the last several weeks, there's been so much volatility in these markets, and we'll look at dollar CAD in just a second because that's been another one that has been super different than this yen piece, super uncorrelated. Obviously, CAD and yen are almost always pretty uncorrelated, but just like the difference in the movement has been wild over the course of February. But my point being, going into something like month end, where there usually can be some volatility, like you say, Pete, around the end of the London session, where the U.S. and Europe kind of overlaps in that 7 a.m. to maybe 10, 11 a.m. Central Time window, I wonder if volatility will beget volatility here, and we get, instead of 20, 30-point moves around the month-end flows, it's double or something like that. I
always put on a kicker, and this is one of the weird times where I always talk to people, don't use time as your guidance for a trade. Price should determine whether or not you stay in or get out. None of us are smart enough to know when the market will move. This is a time-based trade. You take the extreme. If the extreme doesn't capitulate, in other words, they marked it up with this price-sensitive buyers, and the dealers mark it down, then you've got something. But if it sits there, you and every other boy genius that have tried to fade this move are all in the same position, that you've got on for basically one reason, and it's a race then to get out.
Yeah, and we'll actually do a nice piece in just a second about, you might be saying, how does Pete know if it's up or down or sideways, if you're buying or selling or whatever? We don't know where any of these markets are going to go. It's the mechanics that you set around when they do move one way or the other. Because, yeah, I mean, you look at this market here in dollar CAD, and again, I mean, this is the hourly chart for February, and the amount of ground this market has covered throughout the month. And of course, you had the huge move to start the month all around the Canadian tariffs. They're coming in. Actually, they're not coming in. We're punting them down the line. But what's also interesting, Pete, is not just, oh, they get up to 148 for the first time in more than a decade, but They bring the market all the way back. They get down to 142, and they've bounced all the way back to 143 half. In any given month, you know, a 200, 300 point range like we've seen outside of that big outlier is a big range for this market. And so we're going into the end of the month here in a market like dollar CAD, not just like kind of, you know, drifting lower. It would be one thing if they went up, they printed, you know, 147, got close to 148, came back down to 143, and just kind of drifted between 143 and 142. They got all the way down under 142 and now bounced back to what were some highs going into all that tariff event around 143 half. And so now everything is on the table from 144 plus to 143 minus, and being equipped to be on either side of that trade around month end is what we're talking about. From your standpoint, just to wrap up that timing piece of it, if the trade is between 7 and 10, 11 a.m. Central Time, when is it like, okay, for better or worse, I don't really want this. Let's say this dollar CAD market moves down to 142.75. You get long if you're a contrarian, or you get short if you're a trend follower, and the market kind of stays around there, and now it's noon Central Time, and now it's 1, and the market's closing in 4 hours.
So between 8:30 and 9, you'll start to see a little bit of wiggle. When the order flows really, again, they've got to tie and justify against these times lines. So they'll do usually some of the business at 10, a big chunk at 10:30, and some at 11, trying to spread it out a little bit so they get better fills. You'll start to see, if there's stuff to do, you'll start to see the market move, because these guys will start to lay it out a little bit into the marketplace. How far, how fast it moves depends on how much they have to do. So I like to give myself that window of, okay, if I'm starting to see all of a sudden dollar Canada is, you know, 50 bid, 52 bid, 60 bid. All right, you're starting to see it, and it's 9:45. That's telling me something. Somebody's out there got something by. If it continues up, then you start to think about, okay, you'll see a batch of it, usually 10 o'clock, see a little spurt, peak, and it will hold. You'll see another peak at 10:30, and a final one at 11. That's one you probably want to look at, and if it turns, great. You catch that for 20, 30 pips of downside move. If you're sitting on that at 12:30, you've got a problem.
Yeah.
Because you're not the only guy sitting on that, and you put that trade on for one reason. Nothing to do with relative values, nothing to do with anything. This was just a kind of a month end, somebody's got to do something. I'm trying to game it a little bit system, and you just don't hold on to it. You dispense with it.
And especially
because that doesn't, the problem is the extreme is interesting. Is it an artificial extreme? No, it was driven by a different set of participants. But I've seen it more often than not. If the extreme sticks, you see it trade higher towards the end of the day, and Sunday night it opens even higher. Don't let that become something different than it is. That's not your core position. That's not your core idea. That was just a funds-driven opportunity. Move on.
Let's move on to a segment now over in our PowerPoint, and we'll talk about something that I think is super relevant. How to trade volatility in Forex. Pete, you've been doing this for a number of years, but every year it seems like probably since you've started, you've gained more and more tools to how you actually are measuring what it is you're doing in these markets. Because at the end of the day, going back to your first days of trading currency futures or whatever, you're trading price, you are trading volatility at the end of the day, no matter what your function is. Because if the price was one price and there was no volatility, there was no deviation of prices in the Forex market between euro and dollar and Canadian dollar, there'd be nothing to do there, right? And so going back to your earliest days, you're always trading volatility, but today we're putting some new tools around it.
And again, we had little point and figure charts we actually did manually in the pit, and you did see guys starting to come in with looking at running volatility reports, not just the price options on underlyings, but looking at that, smart guys are figuring out, again, let the statistical edge come from the performance of the product. And what I mean by it, the attribution, the dynamic nature or volatility of the product at that time.
Yeah.
Those guys were early adopters of what we look at as essential tools to do anything for clarity.
And now it's interesting because you have so many. It's funny because I wonder, just as a quick aside, if back in that time, since there were so few people in that market, even global, Forex, huge global market, but even globally, I mean, we're maybe talking about thousands of people,
maybe
like across tens or 100 institutions. And now, obviously, it's bigger. Everything is bigger, more people, yada, yada, yada. I would imagine at that time, so many people were using relatively similar, the same tools, that certain prices would kind of hold until they didn't, obviously, and there were huge crashes. Now, there are so many. I mean, every platform has 30 technical indicators. Everybody is selling, you know, I've got this AI bot that is doing this, and so there's so many
once.
The AI agents in crypto that you love. There's so many different tools now that, if anything, it might be, one, it's a more liquid space, and two, maybe there's even more edge because not everybody is using the same stuff. But I do want to get to something that is really core to almost anything, because, again, volatility is the name of the game. We talked about the most volatile pairs in an earlier episode, but I just wanted to bring this back just to show the most classic way that everybody universally measures volatility is with a historical volatility number, the percentages that you're seeing here, or an implied volatility number, percentages that are derived from options markets. And what this number essentially tells you is, you're looking at dollar peso up there at 17.3%, is given historical prices, this market is expected to move 17.3% on an annual basis, plus or minus, in the next year, given historical prices. But that comes with a 68% confidence interval. And so it's saying essentially, okay, let's look at the last 30 days of data. And the last 30 days of data would tell us that there's about a 68% chance that dollar peso in the year moving forward is within a plus or minus 17.3% range. Now, of course, there's a range outside of that. There's potential range outside of that, and so on. And all of these things look like this standard distribution here. At the end of the day, you have 2 sigma moves. This is what people are talking about. 3 sigma moves. A market that crashes either up or down outside of that 68% interval. But for you and me, Pete, we use that 1 standard deviation. A lot of options traders use it. Scalpers. Again, it's so core to so many Bollinger Bands, all these different things.
What's great about this as a trader, especially a product indifferent trader like we are at Tasty, how can I take, I'm a euro dollar trader, euro FX trader. 35 pips is my range. It works for me. That's where I look for my extremes. I go to another product that has either lower or higher volatility. Do I take that 35 pip scalping strategy? Well, if you take that into a market that has twice the volatility, that's not going to be a very productive strategy. This is a tool that lets you normalize that comfort level around that 35 points to either a more volatile environment or a less volatile environment. It's a really powerful tool to give you that same input, but across any product you choose.
And I'm sure, again, you alluded to guys back in the trading pits that were starting to
this out the hard way.
But I was going to say, you would figure this out by, like, it would
by
be
getting run over for 3 days.
Well, but also years of experience of being like, that euro dollar market moves around 10% every year. That Aussie dollar market moves around 15% per year. What does that mean on a daily basis? And then, when the market changes from this year to next year, you get run over day after day after day or you don't trade for a week because you're out here and the market is actually less volatile. Whereas now all these things are computed in real time. Every platform has standard deviation functions and everything else. And we have the numbers here for you from one market to the other. Again, these are some of the most volatile markets in Forex for the last several months of trading here.
That's a great Canada number.
Yeah, and I wanted to dive into that dollar CAD number. And again, just really quickly, so what we did here is exactly what Pete just kind of highlighted, which is like, okay, the percentage number is great, but I'm not waiting. It's not like, oh, it's January 1st of 2025. I'm going to just watch this dollar CAD market, and the minute that it gets outside of 9% to the downside or the upside, I'm just going to go all in, and that's going to be my trade. We bring it down into the daily here. What is the daily standard deviation? And we did it in terms of points in these different markets. And yeah, to your point, Pete, I mean, dollar CAD, a lot of years can be one of the least volatile markets out there, moving right now about 80 points in a given day. And here I'll just lay it on top of the standard deviation chart here, the normal distribution, sorry. And so what we use with this 68%, this one standard deviation, and you can see here it's plus 80 points on a given day or minus 80 points. It's just a starting place, right? What's an example of how a trader like yourself uses these numbers?
Well, and that's a great question because, okay, 81 points. Do I go from the previous day's close? Because the markets have been trading for 9 hours.
Sure.
Or do I go from where we are right now before the event risk, whether it's unemployment or whatever?
Yeah.
Is there any right answer to that? No.
No.
I think you look at if you've centered up in the middle of the range, that answers your question for you. If you're 40, 50 points higher, it's a little bit different exercise. But for me, this is, what I love about this is, okay, on a normal day, if we're getting Trump tariff or dollar weakness, bond strength, we get 80 pips on either side of a reasonable middle point from yesterday. There's some interest for me being a contrarian. If it's a binary event risk, non-farm payrolls, whatever.
Canadian unemployment.
Right.
Yeah.
Now, not the tariff stuff, because you don't know when that's coming out. I take that number, depends how aggressive I want to be, and maybe I'm looking for, I want to sell dollar Canada because it's had such a run up. I may take 1.5 times that number, but I'll use 2 times that number on the downside.
Of course, yeah.
And it's as easy as that. So you've got the core number, how you tweak it, rather than thinking, okay, where do I even start? And then the proclivity is to go back and draw lines on the chart. And I'll tell you, if lines work,
hard.
Use it.
It's really hard.
This is far better mechanics.
Well, for day trading and for scalping, this is a great place to start.
Absolutely. And we will continue to deliver more and more. This is, and I need to be careful when I say that, this is actionable trading intelligence. Me drawing a line, a cup and a handle, a doji star, or any of the other stuff. And I'm not bad wrapping technicians. This is useful as a trader.
Well, you have to give in at some point to the fact that all these markets are truly random, and all you can hope to do is be informed about them and go from there.
Yeah, this is telling me 20, almost a third of the time I'm going to be wrong.
Yeah.
It's going to continue to go.
Yeah, exactly.
But if the world lives on 50-50 bets,
it's a nice piece of edge.
That's a nice piece of edge.
And the last thing that I'll say is that it also is the great equalizer, to Pete's point. Not only if I want to trade multiple markets within an asset class, but outside of asset classes, but also right now, you've got a commodity currency market. Let's take a look at that. Aussie only moving around 30 points. Kiwi only moving around 30 points. And their commodity currency brother, Canada, moving double, almost triple that. And so you got to stay tuned to these things because, to your earliest point, Pete, every market is not the same. Every market from week to week is not the same. And so it really is the great equalizer to let you know, okay, euro dollar, the opportunity's around 40, 50 points. But for, Japanese yen, it's closer to 100 points. So
Yeah,
it's
and
interesting.
you look at this, the New Zealand and Aussie numbers at 30 basis points. There's not a lot to do with that. There is, if you have an opinion and you want to buy, Aussie continues to be on sale, irrespective of what's going on, which is a little problematic from a tape action. It really hasn't been able to hold on to a good bottom. But if you want to pick it up cheap, and month-end flows give you a 60 pip downdraft, 2 times the standard daily range, still a tight range, but you can use it for that.
It's abnormal. It's an outlier. It's something to look at. But yeah, that'll do it for today's episode. Tom, Tony, and Vanetta coming up next. Thanks so much for watching. Peace.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
I came from a unique family background. My father was a trader at the Chicago Mercantile Exchange. He was a cattle trader. Now, my grandfather was actually a pork belly trader, and when the exchange was founded, it was actually founded as a butter and egg exchange, and they were in the egg business. So back in the 20s, they were part of the founding membership of the Chicago Mercantile Exchange. I pushed my father very hard to let me start as early as I could, and he was incredibly kind and generous to give me that opportunity to start. The exposure to the markets was kind of that connection for me that made everything come to life. Within the world of futures, there are 6 distinct asset classes. So I am usually putting together a portfolio within equities and energy, metals, foreign exchange, and interest rates. Also agriculture, I tend to combine a series of positions, some directional, some pairs trades, others with an options or a theta component, trying to put together a portfolio that takes advantage of opportunities, price extremes, high volatility to generate productive returns.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hola.
Look who decided to come into the office today.
Yeah, how about that?
How about that?
Yeah, you like them apples.
Must be liking the lunch.
No, it's a new place. I'm a little...
Yeah, you said you don't like it.
I'm a little apprehensive.
It's not a new place. We've had it a million times.
Oh, is it Saigon Sisters?
No, it's
Bahi Boohoo.
It just banh mi. It just says
the
banh mi.
I know, it's the
But
same.
what's the name of the restaurant?
It's the same banh mi place. Tori's on payment for order flow from this place.
Wow.
She's on a full kick.
Wow. Not
Yeah.
you with the
So
conspiracy
this is like
theory.
the banh mi sandwiches or something like that?
Yeah, and they're gross. I do not like them. They're too doughy.
You don't like banh mi sandwiches as a
do like-
concept or just from the specific place?
As a concept, I give them like they're not my favorite sandwich.
Okay.
Like they don't compare with the Italian sub, for example.
Okay.
Or they don't compare.
What can compare to an Italian?
But as a sandwich, I'm okay with them. This place, they're a little bit chewy. They're not my thing.
Huh.
Their pork is okay. Their duck is okay.
We're getting duck sandwiches? No, we're not.
I think they do pork and duck.
Okay.
But I don't. It's okay.
Interesting.
It's not my favorite. Let's put it this way: of all the lunches, I already told Tori this is one of my probably my least favorite.
And what'd she say? Talk to the hand.
She said, and I quote, "Tell your story walking time."
Yeah.
She's like, "Thank you for your feedback."
Excellent feedback. Let me look into it.
I'll look into it.
Excellent feedback.
That's good times.
Let me look into it. Oh, you like the sandwiches, James?
Oh, wow.
Oh.
James likes these sandwiches?
That's what it says. Yeah, that's what he
Oh,
said.
I just, James, I
He's
lost.
sucking up to Tori. Who knows?
I lost a little respect for you right there. These are very mediocre.
See, now
he's the only man I've ever seen that threw 20s at you like you were a dancer. I don't know.
They don't have any taste, and they don't have a lot of spice to them. They throw a few jalapenos on there.
Sandwiches aren't supposed to be
like nuclear, like nuclear hot.
Sandwiches.
Yeah.
Oh, James doesn't know about the sandwiches. He was just happy that Tori told you off.
Oh.
That's good.
No, she tells me off all the time.
Get in line. Yeah, sure.
Yeah.
Doesn't matter.
Yeah, see? Yeah, except for now, but I'm sad. So we have a little coffee shop restaurant in the lobby, and sometimes if Jessica and I don't like the lunch, we will just go downstairs for like a little girls' lunch, take ourselves out to lunch.
I didn't like their food.
I liked their food. It was good. I had breakfast. They had breakfast tacos, which they had avo toast.
No,
they had bagels, and then they had like a nice lunch menu.
I did not like their food.
Oh no! But I just found out they're closed.
Closed yesterday was their last day.
Son of a biscuit.
The landlord raised their rent, and they and the guy that owns that is really nice guy.
He has a bunch of locations in the city of Chicago.
Yeah, he's a lot. He's a very successful coffee entrepreneur.
Yeah.
He helped me.
Sadno's trying to follow in the footsteps of him.
Oh, he helped you.
He helped me.
Oh, that's awesome.
He's such a nice person. We interviewed him on the show years ago.
And you've already burned that bridge, probably.
When he doesn't pay when Sadnov doesn't pay the bill, that bridge will be burned.
He was so nice. He helped me pick out stuff. Like, he was great.
Right, yeah, because you started your
Super
own
nice
coffee business. Yeah.
I mean...
So are we getting a bad coffee now in the lobby?
I didn't get a good coffee.
Yeah.
I'm a one and done.
Interesting.
Yeah. No, I only wanted a place near my house. I don't care about being a coffee entrepreneur is not my thing.
You don't want to build a coffee empire.
No.
Wow. Okay.
Are you
I don't
sure?
know. I'm 100% sure.
Everyone's lazy. No one wants to work anymore.
Actually not. I can't figure out how you make money selling coffee.
Yeah. Well. Yeah.
I don't know how you make money selling coffee. I don't know how you make money in that business. It's just, I don't know. Can't figure it out.
Well, what did you do last night? Did you go to your coffee shop or?
No, we actually were working last night. It was a late night. I mean, I was working. It was late night.
Was it like a podcast, like a webinar?
Late night. What's a late night for you?
Like
6?